Welcome back to Investing Talk Podcast. We've had a lot of listeners asking about Dollar General, so we're going to dive in today and really get into it. You're looking at this stock, and it's March 2025. The market is a little shaky, to say the least. We've got tariff threats and recession whispers,
Yeah.
enough to make any investor nervous, especially about consumer stocks. But Dollar General, they operate in the discount retail sector. And this is a sector that often does pretty well when the economy takes a downturn. I mean, it makes sense, right? When money's tight, people look for value. So on the one hand, we have a market that's kind of on edge, but on the other hand, we have Dollar General, a company that's known for being resilient during tough times. But their stock has kind of taken a hit recently. So what gives? That's exactly what we're going to unpack today.
Yeah, it's an interesting situation. As of March 12th, Dollar General closed at $74.85. Now, to put that into perspective, it was trading above $156 just a year ago, and it even reached an all-time high of $246.25 back in 2022.
That is a steep drop.
Yeah.
So is this a sign that Dollar General's model just won't work this time? Or is this just like a little temporary blip?
Well, it's important to remember that the entire market is experiencing sell-offs right now. It's not just Dollar General. I think those economic concerns that you mentioned are definitely a factor. The real question is, will Dollar General be able to kind of withstand the pressure like it has in the past? This is what makes Dollar General so fascinating to kind of analyze right now. Some investors believe it's part of what's called a recessionary basket. So, stocks that tend to do well when the economy slumps. They kind of see Dollar General as like a safe haven in a storm.
Okay, I get it. That makes sense. So let's take a closer look at Dollar General's recent performance. What can you tell us from the technical analysis?
All right, so in the past month, the stock has been really volatile with some significant highs and lows. Currently, it's trading below both its 50-day and 200-day moving averages. That's usually not a great sign, but there are some hints, perhaps, of a potential turnaround. Some analysts are pointing to like a rounded bottom pattern, which could mean the stock is maybe starting to stabilize. Now, to understand this a little bit better, imagine like a ball rolling down a hill. It reaches the bottom and starts slowly rolling up the other side. So that's kind of what a rounded bottom pattern, looks like on a stock chart.
So we're seeing a mix of, positive and negative indicators. Is this just short-term noise, or could this be a sign of a larger trend?
Well, that's always the tough question, right? The Relative Strength Index, or RSI, can give us some clues. The RSI is like a speedometer for a stock's momentum. Right now, Dollar General's RSI is kind of hovering around the middle. It's not sending like strong signals either way, which means it's neither overbought nor oversold.
So the technical analysis paints a maybe a little bit ambiguous picture, we'll say.
Yeah.
But what about Dollar General, the company itself? Are there any internal shifts or news that could be impacting the stock?
Yeah, there are a few internal changes happening at Dollar General that are worth noting. For instance, they recently reversed their self-checkout policy, which kind of caught a lot of people off guard.
Why this sudden change?
Well, it appears they're trying to kind of prioritize customer service and improve the in-store experience. Some investors think this could lead to increased customer loyalty, but others worry about longer wait times and, potential operational issues. It's definitely a move that has sparked a lot of debate.
Risky move, for sure.
Yeah.
What about the management team? Any changes there?
Well, there was a bit of a reshuffling of the executive team earlier this year. Steve Deckard, who led merchandising, was appointed Executive Vice President of Strategy and Development. This kind of suggests a potential shift in Dollar General's approach. Remember, 2024 wasn't a great year for them. Their stock dropped 44%. So they're under pressure to find ways to improve.
Interesting. Seems like they're shaking things up both internally and, at the leadership level. What are analysts saying about all this? Are they optimistic about Dollar General, or are they more cautious?
It's pretty mixed, actually. Analysts are divided. For example, Telsey Advisory lowered their price target for Dollar General to $85, citing concerns about weak consumer spending and increased competition. However, firms like Bernstein Sogen are keeping an outperform rating with a $90 price target.
So conflicting opinions, a classic Wall Street dilemma. So how can investors kind of make sense of all this?
I think we need to consider the bigger picture. It's not just about what's happening internally at Dollar General, but also about external factors like the tariffs we discussed earlier.
Right, those looming tariffs. How much could those impact Dollar General? I mean, while they focus on essentials, will those rising costs still affect them?
Yeah, it's a valid question. Although they primarily sell essential items, they still rely on imports, which means tariffs could definitely impact their profit margins.
And then there's the whole recession question. Some investors believe people will turn to Dollar General if the economy takes a hit. What are your thoughts on that?
Well, that's the big question, right? Dollar General's entire business model kind of revolves around value. So will they attract more customers looking for lower prices during a recession?
Hmm.
Historically, discount retailers have benefited during economic downturns, so there's a precedent for this. But this time could be different, and that's what makes analyzing Dollar General so interesting.
There are also concerns about their reliance on new store openings for growth, right? What happens if that strategy slows down?
Yeah, that's another risk to consider. They've been opening new stores at a rapid pace, but it's not a sustainable long-term strategy. At some point, they'll need to find other ways to drive growth, whether it's through increasing sales at existing stores, expanding their online presence, or maybe introducing new product categories.
So there's a lot to unpack here. Dollar General is facing challenges, but there's also potential for them to succeed. What does this mean for investors, people like you? Is Dollar General a good investment right now?
Well, that's what we'll delve into in the next part, where we'll explore the potential investment opportunities and risks associated with Dollar General.
Sounds good. We'll continue this discussion in just a moment.
So let's talk about why Dollar General might be, an appealing investment for you right now.
Okay, so paint me a picture. What is the argument for investing in Dollar General?
Well, first, consider its potential as kind of like a defensive play during an economic downturn. Remember those recession fears we were talking about? If the economy does take a hit, Dollar General could provide some stability in your portfolio. People are going to be looking to save money, and Dollar General is all about value.
Right, that makes a lot of sense. So if you're a little worried about a recession, Dollar General could be a good way to kind of protect your investments.
Exactly. And, the stock's current valuation also makes it quite attractive. It's trading, significantly below its historical highs, which some investors see as a really good entry point, especially if they believe the company can weather this current economic climate and kind of emerge stronger on the other side.
So it's a potential, like, buy low, sell high opportunity.
Potentially, yeah. There's also the possibility of what's called a reversal trade. Remember those technical signals we were discussing, like that potential rounded bottom pattern? If those signals hold true and the stock starts to, climb again, there could be, some significant upside potential.
How high could it go?
It's really difficult to say for certain, but some analysts are setting price targets in the, $85 to $90 range. That would be a pretty substantial gain from its current price of, $74.85.
Okay, so there's potential for like short-term gains if the stock rebounds.
Yeah.
What about the long-term prospects? What would need to happen for Dollar General to reclaim its previous success?
Well, I think they need to address those concerns about their reliance on expansion. They can't keep opening new stores indefinitely. They'll need to find some other avenues for revenue growth, such as increasing same-store sales, expanding their online presence, or maybe exploring new product categories.
So they kind of need to adapt and evolve, I guess.
Yeah.
It sounds like there are, some potential opportunities both in the short term and long term. But let's face it, every investment carries risks. So what are the biggest kind of red flags that investors should be, watching out for with Dollar General?
Oh, you're absolutely right. No investment is without risk, right? One of the biggest concerns, with Dollar General is their reliance on expansion, as we've mentioned. If they can't maintain their rapid pace of, opening new stores, their growth could stagnate.
And what about those tariffs? Could they really hurt Dollar General's profitability?
Absolutely. Even though they do focus on essentials, they still import a large portion of their merchandise. Tariffs could, increase the cost of their products, potentially affecting their sales.
And of course, we can't forget the overall market sentiment. Even if Dollar General executes its strategy, flawlessly, they could still be negatively impacted by a broader market downturn, right?
That's true, yeah. Market sentiment can be a really powerful force, and it can be tough to swim against the tide, even for a company as resilient as Dollar General.
So it's a matter of weighing the potential rewards against the inherent risks. What should investors be looking for in the coming weeks and months to kind of get a better sense of which direction things are heading?
Well, I think the next earnings report will be crucial. Analysts are anticipating that it'll be released sometime, mid-March based on their typical reporting schedule. Those numbers will give us a much clearer understanding of how the company is performing and how they're kind of navigating, these challenging times.
Okay, so mark your calendars for mid-March. What else should we be keeping an eye on?
Pay attention to those key price levels we discussed. If the stock breaks above $79.35, with significant volume, that could indicate bullish momentum. However, if it, drops below $74, that could be a sign of further trouble ahead.
So it's all about staying vigilant, staying informed, watching those technical signals, understanding the company's fundamentals, and, keeping an eye on the broader economic landscape.
Precisely. Investing is a long-term game, not a short-term sprint, right? It's about making informed decisions based on, thorough research and analysis.
Great advice. We've covered a lot of ground on Dollar General today. Thank you for sharing your expertise.
It was my pleasure.
Before we go, I just want to get your big picture perspective on Dollar General. We've discussed the pros and cons, the risks and rewards. If you had to highlight one key takeaway for our listeners, what would it be?
That's a good question. I think the key takeaway is that Dollar General is at a really crucial point right now. The market is volatile, they're implementing all these internal changes, and there are just so many external factors that could influence their performance.
So it's kind of a wait-and-see situation right now.
It's more than just waiting, It's about actively monitoring the situation, looking for those key indicators that we mentioned, and being ready to act when the time is right.
Right. Can you just remind us again what signals investors should be watching for?
Sure. First and foremost, you really want to pay close attention to those earnings reports. The next one's expected mid-March, and it could be a real turning point. If they exceed expectations and demonstrate that they're effectively navigating these challenges, it could be a strong signal to buy.
Earnings can be really important. What else should we be looking at?
Keep an eye on those key price levels that we talked about. If the stock breaks above $79.35 with good volume, that could signal a bullish reversal. However, if it drops below $74, that might be a sign to be a little more cautious.
So it's all about staying vigilant, staying informed.
Precisely.
Well, we've covered a lot of ground on Dollar General today. Thank you so much for taking the time to share your expertise with us.
It was my pleasure, really.
And to our listeners, thanks for tuning in to Investing Talk Podcast. We hope you found this episode informative and helpful. As always, we appreciate you joining us for this deep dive into Dollar General. If you enjoyed the show, please consider subscribing and leaving us a comment. We always love to hear your feedback. And until next time, happy investing.